Good afternoon, everybody, and welcome to today's special session. Special because if you look at the topic, you'll see it says, "Where should I invest in 2021?" And we have with us today a special guest. I use the word special a lot. I know sometimes I overuse it, but today is not one of those days. He is indeed a one of a kind guest. I've known him for a few years. I don't know if he knows that I've been a fan of him for as long as I think the past 3 years. He used to be with Nairametrics, and I used to especially like his articles and his research and his investment analysis. So now he's also, he does different other things, and I decided that he's going to be a very good person to bring up here to give us a much more practical feel, rather than listening to people who just feel they can save something, but rather someone who has been in that space and who that's what they do even on his day-to-day work. So we have with us Onome Ohwovoriole. I'm not very good yet to pronounce it.
Let's take it easy, nice and slow. It's
Right? Owo,
Ohwovoriole. Ohwovoriole.
so apologies for not getting it right the first time. So he's going to take us through where he invest in the year 2021. He's an analyst with Money Africa, and prior to that, he was an analyst with Nairametrics, and he has a lot of interest, as you can see here. He's in publishing. He's done some stuff in publishing, automobile services, entertainment, and leadership training. And why I say he has a kind of really interesting interest is, cars and Formula One. So that's something that's really not so common. So, Mr. Ahmed, the stage is yours. I'm sure the audience, they are all eager to hear you. A lot of people have been messaging me backstage that, oh, they want to be part of this session. So please, you can share your screen. You can begin to please start your presentation. Thank you.
All right. All right. Thank you, Michael, for having me. And good afternoon, everyone. It's a Sunday afternoon in Lagos where I am. And I know that for a lot of people, Sundays are for rest or sleep or family and all that. So you taking out the time to attend this session um, is something I don't take for granted. I will share my screen in a bit, um, and I will also, from time to time, jump into a few things online. Um, I like to make my presentations as live as possible, and it's a pity we didn't have this, or we're not having this during the weekday when the markets are open, so one can actually see these things and all that. So um, I'm also not a fan of long presentations because I just feel um, some of these things are kind of like common. So everybody's now is doing Outlook 2021. What should I do in 2021 and all that? So I try to make my presentations as short and as simple um, as possible, right? So like Michael said, I'm an analyst with Money Africa. I head the team there. I'll come back to that. So let's just dive straight into uh, the slides. I'm going to look first as a flashback at last year. Um, it split into the global space and then Nigeria, um, and all that. So the first is how did last year end? I can hear a bit of echo on my end. I don't know if the volume is clear. It sound okay for everyone.
Yes, it is. It
Okay,
is.
okay. Um, so what happened last year? I mean, the biggest headline last year, or the biggest event last year was the COVID-19 pandemic that literally shut down the world for a few months. Some parts of the world are still shut down. Then we also had keenly contested US elections with Joe Biden as the winner. Um, I think anyone who's not looking at what happens in the US generally is missing out on parts of a big picture because between the US and China, I think they produce roughly, if I'm right, probably between 20 to 30% of the goods and services in the world. So one has to pay attention to what happens in both economies. We also had the US-China trade war. But I think with COVID, that kind of tempered down a bit, you know. Then you had the tango between Saudi Arabia and Russia. Um, so even before we had the COVID-19 lockdown, the back and forth between both of them led to crude oil prices coming down. Then COVID-19 worsened things out. But strangely enough, the US stocks did quite well, especially tech stocks. You had the Nasdaq index up 43%. That's the best performance in over a decade. You had the S&P, which is more of a broader index, up 16%. You have the Dow Jones up 7%. So it was a good year for stocks. Um, there have been several theories as to why this was so. Some people would say because we had people at home, and for the bigger economies, there were a lot of stimulus checks and all that. So, I mean, if you're not going out, really, you either would spend on food and gadgets and all that, and trading the stock market. So the year was an introduction into the market for a lot of young people. Um, and also you also had ultra low interest rates around the world. So if everything you can typically do is doing 0 point something 1% per annum, and you can get stocks doing 5, 6, 10% or more, then it follows that you would channel your money to the stock market. So we had the stock market doing well in the midst of a global pandemic. So what of Nigeria? We also had the COVID-19 lockdown, which was unprecedented in Nigeria. I can't remember any time we had such a drastic lockdown in Nigeria. If memory serves me correct, probably the last time we had such an issue was probably maybe during the June 12 days and all that, when things were heated. So, but even at that, it wasn't such a huge lockdown around the country. Some might say, well, was it worth it or not? I'd say yes, because now that we're having a second wave, you can imagine if there was no lockdown, what would the second wave be? It would probably be way worse than what we have now. You also had the NSAS protests, which were huge. I think the last time, if I remember correctly, that we had such a huge protest was probably during the whole fuel subsidy thing, but even that was a bit tempered. Unfortunately, that snowballed to, a widespread looting, and that has a ripple effect on the economy as well. So, some reports will say that probably knocked off 0.5 to 1% of whatever growth we would have seen in the quarter in question. So that was there. In terms of macros, we had sky high inflation, 14.9 or 14.8% as at November. And inflation is key, really, even though it's a number people don't tend to pay attention to, because ultimately, whatever you're investing in, right, you are going to spend that sum of money involved. And a country with such a high inflation rate makes it difficult for you to have that currency as a store of value. So a 15% inflation rate simply tells me that every 6 or 7 years, the price of goods and services goes up by 100%. And what's fueling this inflation, or the sharp rise in inflation, is food inflation. Food inflation went up, or has been on the uptick the last few years, for one of 2, 3 reasons. One, you've had borders largely locked down for over a year, even though they were opened a few months ago also. 2, you've had insecurity in the food baskets of the nation. And 3, you've also had sharp devaluations, which ultimately filter into food prices as well. So you also had devaluations last year, partly due to the tumble in crude oil prices. We moved from 307 to 360 in March 2020. Then moved to 380 in August 2020. I think late last year or early this year, we had what I would term a pseudo movement from 380 to 410, then back again at the I and E window, you know. And the parallel market closed December 2020 at 465 for buy and 470 for sell. So last year was a difficult year, in terms of macros and all that. But on the flip side, you had the CBN cut monetary policy rates twice, if memory serves me correct, and you had the LDR policy, whereby we saw banks getting given a target that, okay, if for X amount of deposits you take, you have to lend as loans. So banks got squeezed quite a bit. TB rates fell sharply, and for the institutional investors such as pension funds and co, and even domestic institutional investors, I mean, having TB rates at the time sub 1% means that you have to channel your money to somewhere else. So that money flowed into the stock market, and it did quite well. The all share index was up 50% last year. And if I remember, sometime last year, at the time, trading was so exuberant that the market had to, shut down for a few hours. So last year was great for stocks, but that was largely because there was nowhere else to invest in. So where should one invest in 2021? Everybody's strategy will differ, right? But factors to consider: your age, the amount involved, and risk appetite, as well as duration. Age is key because the investment strategy for a 25-year-old single person will differ from investment strategy for someone who's say 40, 45 with 2, 3 kids. So really, much as the investment options are open to everyone, how and what you pick, would depend on your age, the amounts you're investing, your risk appetite, and the duration, right? So with something like house rent, for instance, you're not going to put your house rent in cryptocurrencies. That's not a good strategy. Or put your house rent in stock markets, because 15-20% gone in a week means you're short of money. So it's good to have a clear idea of what you're investing in and why, before you decide to go into investing, right? So where do we invest this year? It's still the usual suspects. You have fixed income, you have equities, Nigerian and US equities, you have real estate, you have cryptocurrencies, and you have agri-tech. I kept up agri-tech to the last minute here because it's become a bit high risk, and I think people don't have a clear idea of what is involved. I'll touch more on that when I get to that section. So let's start with fixed income. Returns are low at the moment, whether you're looking at it from the global level, on the Nigerian level. A 1-year T-bill is going for about 1%. A 10-year bond had a return of about roughly 7%. For those with safety as a priority, that hasn't changed. They offer the lowest form of risk because you're lending to the government, so it might not yield you huge returns. But if safety of capital is more important to you compared to return on capital, then that's what you should consider. There is this strong probability that rates will go up in the second quarter of this year, because at the moment what we have in Nigeria is an anomaly. You can't have inflation at about 15%, and the government is offering a 1-year bond at 1.1%. It's possible to have that kind of arrangement now because the biggest buyers of the government debt, such as pension funds, have no choice but to invest in that. But you know, uh, fixed income issued by the government is also attracts foreign interest. So that has subsided a bit because obviously the rates are low and we have FX issues. But sooner or later, we're going to have to reverse from this track we've taken and go back to jacking up those rates. Will they go as high as 10, 15% we saw a few years ago? Maybe not, but will they stay at 1.1% from now to the end of the year? Highly unlikely. Um, then there is a strong possibility that the government will raise a Eurobond within the year. I think that's something that they will explore because right now the government has funding pressures and globally, rates are low. In the US, in the UK, you can barely get decent rates. So for an emerging or frontier country like Nigeria, issuing a bond at say 5, 6, 7%, I think there'll be a market for that, and it will be foolhardy of the government not to want to explore that. So that will happen. So for people who are dealing with a significantly large sum of money they like to preserve, say 100K, 200K, 300K USD, if we're able to get a fresh Eurobond issue, that should be something that you can consider. So how about US stocks? I think stocks in the US market will continue to do well. Um, I don't expect the kind of performance we had in 2020, especially for the tech space. A lot of those stocks have run. So you have companies like Zoom, Tesla, and Co. They've run up really. So at some point in time, there should be a pullback. Um, if we have a severe COVID-19 resurgence and more lockdowns, then you could see cyclical movements across sectors. So when I say cyclical movement, right, you could see movement from recovery stocks in quotes, so or from work from home stocks to recovery stocks. So work from home stocks are stocks such as Zoom, Peloton, Tesla, maybe Netflix, you know. Stocks that have done well when people are at home and can't go out and do much. So if you have a recovery, those stocks are bound to pull back in share price. And for stocks that are heavily reliant on human interaction, airlines, travel, and all that, you would see, recovery. But if the lockdown becomes severe, and for the US, this is key because the US has been the country was heavily hit by the COVID-19 pandemic in terms of number of infections and deaths. So if it becomes sticky there, then you're going to see that movement across stocks. Well, in terms of general performance, rates are low there at the moment. So really, for a typical US investor, equities are probably your only bus stop right now. You're except maybe doing cryptocurrency or some other investments or private equity where you can unlock value. But for the typical investor, then there's the stock market and real estate right now. Um, I don't see rates going up this year. The last economic crisis they had in the US, I think one of the things they always pondered were did they jack up rates a bit too early and all that. So that kind of flashback for them will mean they might leave rates low, at this point. And I also think that even though possibility of a sharp pullback won't happen, but I think one point you would agree, and most people will agree with, is like you can't have stocks doing so amazingly well when the real economy is doing so badly. So it's one of two things that will happen. It's either you have the real economy catching up with the stock market, or the stock market pulling back as the real economy, or if the real economy continues to struggle. So I think what people can do is to diversify and to use ETFs and to just diversify and hedge risk as well. I just have a long-term outlook. I think a lot of people got into the market and are excited, like, oh, I made 100% this year, I made 1000% and all that. That doesn't happen every year. If you look at average returns for the US market, I'm sure it's probably less than, 6 to 10% per annum. So last year was, a one-off thing. There are no factors really that will push stocks at that speed this year. Um, you're also going to have a new administration, right? It's a Democrat that's in government, and typically for Democrats, they are known for big spending, and they're a bit stiff when it comes to regulation. So, all these issues are at play. What's the new government going to do and all that? And, there are lots and lots of forecasts about, renewable energy, this and that. But I think in reality, some of these things are difficult to put in place in the short term, So stick to what's known and what's real, because everybody has different kind of forecasts and all that. But there's always the possibility of the unknown happening, right? You know, so these are some of the things you should consider. For Nigerian equities, I think they will do well, but obviously, I don't see us having a 50% return this year. I mean, there's no magic, nothing's going to push that. Um, and I think what people need to do is to just take advantage of periodic dips to buy for the long term. Um, a lot of people see us moving up the interest rates, especially for short-term instruments like treasury bills and government bonds, moving it up slightly in Q2 this year. So if that happens, you might see a slight pullback from the stock market. Some people have argued, are stocks cheap or expensive in Nigeria at the moment? I'd say not yet, really, because really what's been the issue with Nigerian stocks is more about the macros really than the price. I don't think we're overvalued. But if the macros are poor and we have weak macros in Nigeria, then companies can do well. So if I take a GT trading at 30 something naira, that's about 5 point something times earnings. I don't think that stock is overpriced. This is not investment advice. I'm just giving an example. I don't think that stock is overpriced. So even if you take an MTN trading at about 160, earnings of say a bit over 10 naira or 11 naira, it's not overpriced really, you know. Um, but we just had a poor macro so far. So what we have here is an equity market that boomed last year because there was nowhere else to put money. I think that will change sometime this year, but I still think net that the markets will be positive this year. So going into a bit into specifics for US and Nigerian equities, I think it's going to be a mixed deal. You're going to have brewers continuing to struggle. So the likes of Nigerian breweries, Guinness, international breweries, there's no magic they're going to do this year. Consumers are tight in terms of purchasing power. You have pieces of lockdowns across the country. Um, there is always a black swan event that if things don't change, who knows, we could have a second lockdown. It's highly unlikely, but it's theoretically possible in this country. So if that happens, you might as well just write off most of 2021 for those in the brewery space. Banks have typically done well. But for last year, what we saw was really one-time factors such as the devaluation. So for banks that are net long FX, that means I have more FX assets than liabilities. They tend to do well. But net, the banks, especially tier one banks, will do fairly well this year. Telcos will have a decent year, really, barring the whole NIN, SIM registration and all that. So I expect telcos to do well. Um, then for the FCMGs and industrials, some will benefit from the border reopening, some will not. So you could take companies such as Vitafoam, Nestle. Border reopening is a bit positive for them. Um, so for companies such as a Dangote Sugar, um, what's it called now? The palm oil guys. Border reopening is negative for them because imported palm oil is cheaper than local palm oil. So there might be a bit of a pullback for them, But I think net everybody will survive and do well. Um, so for um, real estate in Nigeria has always been a poor store of value, really, in terms of capital appreciation, in terms of rental yield. And this is because returns have always been sub-inflation, really. So, I mean, rental yield in Nigeria, depending on where you are, could be anything between 3% to 6%, right? Inflation is 15%, so you're already negative 9%. Um, you know, People always argue that, oh, buy this here and buy that here, and in 5 years' time it's double and all that. I like to deal with reality, what's feasible. You cannot predict purchasing power in 5 years' time. You can't predict, developments and all that. So, for instance, a lot of people say, okay, buy land where Dangote is building his refinery and all that. I mean, people fail to understand that, if things don't change, uh, you could end up with another version of a papa there. So then your forecast to make 100% in whenever you bought the land doesn't work. So real estate has always been a poor store of value in Nigeria, except maybe you have pockets of that do well, such as maybe those who do student real estate and all that, and they get rental income. But generally, I don't expect much uh, positivity in terms for the real estate sector this year. But for people who have made mega gains in other assets, then switching to real estate isn't a bad option. So if you've probably done 100%, 200%, and you decide to diversify a bit, um, that's okay. I think foreign real estate would be a better option, and things are much more predictable there. Generally, real estate tends to, uh, in terms of value, it tends to move in tandem with inflation. But it's good to do your due diligence and have a clear understanding. I'm going to speak more to that towards the end of the slide. Um, for agri-tech, returns are lucrative, but the risks are also high. Um, Aside the risk of farm slash livestock failure, you have security issues. You have security issues in the north, security issues in the middle belt. And these are the agri hubs we have in the country, right? So you can do all the maths and everything is right, but if your farm is raided, if your poultry is raided, man, that's money lost. And if we have another lockdown, it's highly unlikely, but theoretically possible. If that happens, what happens to the agri space? So I'd say stick to firms that have a track record. You can split across those firms, and uh, don't invest in a wild manner. Don't invest money that will cause you to lose sleep at night if something happens. Um, for the cryptocurrency space, last year was great for Bitcoin. I think it did over 200%. So far this year, it's also been great. But I think one thing most people will agree with is at some point in time, um, there will be a pullback. How sharp the pullback will be is nobody knows. Um, will the pullback be restricted to just Bitcoin or the whole market space there? Nobody knows. I was looking at prices sometime before I got in, and it was down about 4% or 3 point something percent today. So um, Bitcoin has a funny relationship with the other cryptocurrencies, right? When you see a sharp rise in Bitcoin, you see you see a decline in other cryptocurrencies. If you see a sharp fall in Bitcoin, you also see a decline in other cryptocurrencies. So really, for you to have the rest of the crypto system doing well in terms of price gains, you need Bitcoin to trade at a somewhat steady pace, So there'll be winners, there'll be losers, but I think what's different is we're having a lot of institutional players coming in. But I would say don't invest in a wild manner. Don't put the bulk of your money there, and have a clear strategy. So for assets that are volatile, it's good you have a strategy. Why exactly am I here? Um, am I here for the next 2 3 years, whether it goes from 0 to 100? Am I going to exit when I make between 30 to 50% of my investment? For crypto, that is change really, but at the same time, I realize that a lot of us are not full-time traders or investors. So if you know you're not in that category, it's good to define your exit and entry strategy, and stick to it. But there are a lot of exciting things that are happening in that space. I think what people fail to understand is the technology is more exciting than the movement in price and all that. Um, so it's a great space, really, but please play with caution. Lastly, and the most important place to invest in 2021 is your personal development. If you don't have a personal development, I think that's something you should work on. Um, Work on increasing your income, work on diversifying the sources of income, whether it's country, whether it's job. Um, I find that a lot of people are so caught up in sweating their money that they forget that you also need to increase the volume of money you're playing with. Some opportunities work better with scale, right? So someone who's investing, say, 10K, 15K a month, really, you don't have much room to play risk. That's just a plain truth. Um, Compared to, say, someone who's doing 50K, a month, or someone who's doing 1 million a month. So some opportunities are only open when you have a significant sum of money. So I would say take out the time to improve yourself, um, you know, and work on being a better person, work on earning more. If you are a 9 to 5, you have to set goals for yourself. What do I need to move up in my current place of employment? Do I need to change jobs, or do I want to move to another sector? If you are a business person, you have to ask yourself, are you putting systems in place? Is your business built around you? Because if your business is built around you and it can't function without you doing everything, then you don't have a business really. Really, it's more like a job. Um, so those are the things we should consider, because I find that people spend so much time focusing on, okay, where can I make 100%? Where can I make 1,000%, which is hot right now? Than the size of what they earn. Um, I think people also need to have targets. And the goal should ultimately be to get myself to the 1% percentage of that of the population in Nigeria. Um, I know we don't like it, but the honest truth is Nigeria is a really poor country. So um, if you can get yourself into that 1% bracket at an early age, it would do amazing wonders for your personal finance. So if you can get yourself into the 200K, 300K, 1 million naira a month bracket, it might look small in quotes, but trust me, there are not many people who earn that amount of money in this country, you know. So I think that should be the goal, alongside learning. Then diversification and due diligence are key. Um, I think a lot of people don't read terms and conditions. A lot of people don't have a clear idea of what they're investing in. So, for instance, you see people complaining that a dollar investment or a dollar mutual fund or a dollar fixed income instrument is doing, say, 5 or 6%. And they'll tell you that, oh, that's small. I need something that will do 12, 15%. It's possible if you buy a bond below face value, that's doable. Some people were able to do that last year, you know. But you have to have a clear idea of what's the goal for your dollar investments. Dollar investments are meant to preserve value. Dollar fixed income investments are meant to preserve value. Um, they're not meant to do magic for your portfolio, you know. So if you're doing a dollar investment with a 5 or 6% return, there's no magic it's going to do in 1 year. You are better off looking at 2, 3 years or more, and then you'll be better. So really, those little things matter. So even with the stock market and all that, people need to understand is that um, you have low risk, medium risk, and high risk investments as a whole. Um, Learn to diversify your investments properly, right? So let's say I have 100 naira to invest, and I'm putting 40 naira in stocks. Maybe putting 60% or 30% in agri-tech, and putting 30% in some low risk investments. Um, the fact that I'm doing 40% in stocks doesn't mean I'm going to put the whole 40% in one stock. Um, I can split the 40% and put part of it in the local stock, part of it in a foreign stock. Um, I can split it further and put part of it in an ETF. So I can buy several ETFs for the US market. Or if I'm dealing with Nigeria, I don't have to have all my investments in one stock, no matter how wonderful. So it's really just knowing how to diversify one's investments. So you're not shaking, really. So if you're in a whole Tesla gang or Netflix or whatever gang or Zoom this year, it's important you diversify your portfolio across countries, across currencies, and across asset classes. And it's also important that people pay attention to macro events or what happens to the country as a whole. A lot of people are fixated on just the immediate end, but really, what happens in the country affects you. So we're in Nigeria, for instance. Whatever policies the CBN is making around FX, affects you. Whatever policies the government is making affects you. And some of these events are easy to follow, right? So something as simple as crude oil prices, everybody can monitor them. If you see crude oil moving from 50% or $50 or so to $30 a barrel, nobody needs to tell you that you're going to face FX pressures in the country. And, so you have to adjust your investment strategy, accordingly, So you just keep an eye on all things, and I think 2021 will be a great year. Yeah. So that's my presentation. If you need to reach out to me, you can send an email, you can tweet at me, and I'll answer. Yeah. So thank you for having me. I'm open to questions now.
Yeah, nice, very detailed, though short to the point, but yeah, it packed a lot of punch. And I really like the angle you gave to many of the things you said. Any questions? Anybody having questions before I begin to ask the usual questions we ask? Any questions from anybody in the audience? There are some questions that I'm going to ask on behalf of some people. Some of them. Okay.
Okay, no problem. Let me see if I can pivot to the conversation side. Yeah, can go ahead.
Okay, all right. Okay, so Onome, there has been a question that some few people have been asking me in the last couple of weeks, and okay, so someone is even asking a question. Now, maybe I read his own question first before I ask the one I want to ask. So he is asking, what about e-commerce? What's your take on e-commerce this year?
I think let me start from the global perspective. I think e-commerce will do well because one is we are still in the midst of a pandemic, right? So a lot of people are largely going to be home, and also habit is also key. A lot of people have gotten used to ordering stuff online and all that. So even if they wake up and they're going back to the usual 9 to 5 routine, some element of that is still going to remain. So that's on a global perspective. From a Nigerian perspective, the honest truth is we're a poor country, and I know people don't like to hear that, but that's the reality. Nigeria is an extremely poor country. So you only have a small niche of people that can actually afford to regularly order stuff online, you know. Um, but I think one area I find exciting for some of the players, I think, would be the payment segment of the operations. I think we're going to see some interesting things happen there. Um, but really, e-commerce here will obviously do well, but not at the pace of countries such as the US or China, because we really are a poor country, and so you don't have many people ordering stuff. I'm sure if you were to take a census here of how many people have ordered anything online, I don't think you see more than say 30 or 40% of people. So I think it will be a great year, but really you can't, if you are doing business in Nigeria, investing in Nigeria, you really can be greater than the economy as a whole. Yeah.
Okay. So the questions I want to pass to you right now are questions people have asked. And so the questions are, this is me summarizing most of all what they used to ask around. So people come to me and say, oh, I follow your investment group, or I read something online and I know you do investment. And so there are three things I notice a lot from their questions. So one is some people have this versus that kind of decision. They always are like, what's the thing I need to invest in? And when they are speaking in kind of like, what is that thing that I should take all of my money, pull it out from wherever it is, be it in the bank, or some of them already have funds sitting in some, maybe a lot of people who did fixed income about 2 years ago, 3 years ago, when they were returning, say, 18%, 20%, 15%. And that was so good that they never worried about removing their money from it. And then now that those returns are low, they are like, what do they put all of their money into? So I wanted to speak across the three things. So I want to just say them together. So the thing number one is the fact of people wanting to have this intention of the one thing that I should put all my money into, the strategy. I don't want to call it a strategy because it looks more like an intention. I feel my money can do better in somewhere else. Let me pull all of my money from wherever it is and put it that somewhere else. Then the other thing, I see people, when they ask me questions or when they are conversing around this financial market, and also in groups, because I'm also in some groups where some of those groups are support groups for those who run investment platforms. And there's always this question around market timing, or these discussions around market timing. So you see people saying, you know what, I just enter the market at a strategic point, or I enter a particular stock at a point, and then when I hit this, I move out. And to be sincere, I think people underestimate market timing. It's a lot easier when you're looking backwards,
Yeah.
but if you've been in the market for long, if it's something someone can do, I think we'll have a lot more people who are millionaires and billionaires because they're in the market, not that because they are doing Tesla or they are doing Dangote or they are doing something manufacturing. We'll have a lot of more traders, billionaires, because that is the goal of everybody who trades. Then number three is people always asking around valuation. Who it's as if my earnings have been cut into two over these last 4 years, or my investments have suffered greatly, even though they have done good in terms of naira time. But this devaluation, it's like that devil that comes with with a machete and just hacks your earnings and net worth. So people are always talking about these three themes. So I just want to get your own unique perspective to which asset should I put all my money in, or investment, market timing when to enter, when to come out, and then valuation. What are your own
Okay.
about them?
Okay, let me start with, okay, where should I invest in? I think the reality is invest in a basket of things. Um, whether globally, whether locally, it's hard to say just put your money in one thing, because there's a risk involved, right? So even if you say, okay, I'm just going to leave all my money in a euro bond, there is no zero risk investment. There is no risk investment. Um, I was joking with someone a few days ago that if you're looking for absolutely no risk investment, then you might as well just leave the money with God, because that's the only place that you have absolutely no risk. Um, so, but really, I think people have no choice but to take some form of calculated risk, you know, and ultimately it depends on your risk appetite, on the amount of money involved. So let's say we're dealing with 100 million, right? Um, at that point, for someone with 100 million cash sitting in the bank, um, capital preservation is more important than return on capital, you know. So you can afford to say that, you know what, let me leave the money in a euro bond, and whatever I make on the euro bond, I can live off it, right? Or let me put the money in a government bond. So even if I'm making 1%, I'm fine with that. Um, but for someone who's investing, say, 50K a month, then you can't afford to do, say, 70 or 80 or 90% in just US assets and all that. So some form of risk taking is going to be involved, but it's a matter of splitting it. You know, you can split it across assets and all that. Um, and yeah, for Nigeria, you might say, okay, where can I invest in? Maybe in terms of returns that are a bit above inflation. Then you're left maybe the stock market and maybe agri-tech and all that. But you know, one thing people need to understand is investment is a lifelong journey. Um, there will be ups and downs. There will be opportunities that come around every year. There will be opportunities that come around every 3, 4 years. So, for instance, last year you had stock market stumbling in March. You had GT trading at 16. You had Zenith trading around 10 or something couple. You know, um, that's a once in a while opportunity. Nobody knew that was going to happen. Um, so in that case, for whoever who took position there, they're probably sitting on 100%, but that doesn't happen every year, you know. So I think it's a matter of people knowing their strategy. But obviously, the bigger the sum involved, then the more your goal will be capital preservation, really. Um, for market timing, one really can't time the markets. I mean, yeah, you could do TA and all that, but um, at the end of the day, um, FA, you know, you can have the right TA, but if the FA is something else, you know, the TA will still stops to function, you know. So, for instance, you have a devaluation of the naira. You can't really TA your way out of that. You know, I mean, you can see the signs, but it happens snap overnight. What do you do? Um, you know, or you have the whole border lockdown and border opening. Those are things that you can't really predict and factor. So, what I tell most people to do is really just have a particular sum you want to invest every month. And when you want to do so, it could be monthly, it could be quarterly, you know, whenever. When you want to do so, look at what you've invested in before, um, and look at the opportunities that are available at that point in time. So, for instance, I'm looking at the crypto now and it's down 4%. Um, if it goes down, say 15, 20%, that's an opportunity, right? So I could then plug into that. Um, if global stocks or local stocks are doing badly at the moment, that's an opportunity, you know. But ultimately, it's your long-term consistency in investing that matters, not what happens this year or this month or this week. I mean, all that is nice, but really, it's more of a long-term thing. Compounding is what matters, and compounding only happens with time, maybe 10 years, 20 years, 30 years. So I think a lot of people are too focused on the now. A lot of people are kind of sweating their assets now for what they can yield and what they can earn. But really, you should let the money breathe a bit and let it compound. So I kind of compare it to driving. So let's say somebody is driving a Kia Picanto or driving a Beats or a Toyota Corolla, you know, and you have somebody who's driving a Land Cruiser or driving something, a huge SUV. Um, Obviously, the SUV all conditions being equal, is going to move faster than the Corolla, right? So it's the same thing with money. You should be more focused on um, where am I going to be in the next 10 years or 20 years, and how am I working towards it? Am I making progress towards it? And what happens now? Um, Someone was asking, like, will there be further devaluation with Naira in 2021? The only person that can determine that is the guys at the CBN with green ties and all that. Nobody knows. Um, you know, you can argue it's left, right, and center. The arguments for more devaluation, the arguments for leaving things as they are. But I think what's important is signaling. Um, Signaling, in managing the central bank, what matters is signaling. Um, in what we've had really, especially in last year, you have a signal like, okay, we're going to leave things the way they are. Next thing, boom, FX rate is moved. So it's hard to say. But I think really that what's more important is um, seeing more growth on the fiscal side. Nigeria is in a tight spot, really. So really, we're kind of hitting the max in terms of what the CBN and Co can do. So the government has to take that part and pull up itself by its shoelaces. So it's hard to say, really. You might see a bit, you might see not. I know they are tinkering around a few things that might help and all that, but let's see how it goes.
Okay, thanks for that. So two other questions that again I see people asking, and I'm guessing that it will do some good for people to hear what your own answer to this kind of questions. So there are a lot of people who they find it difficult to wrap their head around uh, valuing, putting an assessment around these non-fixed income type of investments. So they are used to something that they've been told, oh, give me a millionaire, put a millionaire into this, and we'll give you 10% annually, or we'll give you X% annually. So they are used to that in the fixed income side. They are used to that in some of the agri-tech business. But when it comes to stocks or anything that tied to stocks and those other types of investment where two things, you cannot be told you'll be getting assuredly every year, and then their capital can be eaten into. So they have a trouble placing those kind of investments side by side, the fixed income. What do you think if I'm someone like that and I'm asking for guidance on how do I, compare having my money in a fixed income versus having it in stocks, where fixed income I'm certain that I will get this. Even if I'm not certain, the person selling to me is telling me that this is how much it gave last year. It will never drop to it into my capital, and they are estimating that it will give me X percentage this year. But stocks, everybody is telling me they don't know what it will give, and that it can eat into my capital. And then how would you, help me out with deciding on how to juggle the two?
Okay, I think what a person could do would be to it's not a case of choosing, okay, am I more interested in return on capital, or am I interested in safety of capital, right? So if safety of capital is more of your priority, then you have to sacrifice returns on capital, right? So that means you may not make a significantly huge return on your investments. Um, but if return on capital is more important than safety, right? Or if you're willing to take significantly more risk, then the first thing to do is that a huge proportion of your investment shouldn't be in high risk assets. That's the first thing. The second thing is to set individual targets, right? So, for instance, let's say I'm investing in a stock. Let's speak in Nigerian stock XYZ. Um, I know that if I look at the 5-year charts of the average return on stocks in Nigeria, it's net net. It probably might be negative, right? You could have 50% last year. I think the year before that was negative, and the year before that was negative. If I'm right, 2017 was the last positive year we had before 2020. So with something like that, expecting 50-60% return is unrealistic. But you should then focus on, okay, what's my dividend yield, right? So if a stock is, say, 25 naira or 30 naira, um, what's my dividend yield? Am I getting as high as, say, 10-15% on dividend yield? If I'm doing that, then I'm fine. But where people miss the point is certain investments are great for returns, but they may not be great for capital. So what you should then do is that you take whatever returns you make from that investment and you channel it into a safe asset. So I can say, okay, fine. I make X amount of as dividends on stocks, right? Now I can take that money and put it, say, in a dollar mutual fund. I'm preserving my value that way. So I think it's just a matter of drawing up the right strategy, then you can know what to do. But one thing a lot of people need to get used to is take a bit of risk, right? So um all across the world, fixed income isn't usually the most lucrative of investments anywhere. It's more about safety. But the poor macros that Nigeria has had and the sky high inflation we've had mean that if inflation is around 14-15%, then ideally your fixed income should be doing double digits, right? But that high inflation means that people are unwilling to invest in other things. Um, and whether we like it or not, at some point in time, we need to tackle inflation in this country. We can't you can't do things sustainably in certain sectors if inflation is as high as 15% a year. That's the honest truth. It's I mean, if your interest rate or rate on loans is 15, 20, 30% a year, how many businesses can sustain that? How many people can take loans to that? So really, one can build one strategy around fixed income. Because ultimately we need to find ways to pull down that inflation to single digits. And when we do so, the fixed income instruments will also go down as well. So what's more important is having a portion of one's portfolio for risk and taking the returns and investing it in areas of safety. And just keeping an eye on things. So if, for instance, you got into the markets in Nigeria or globally, and in March last year, and you're up 40, 50, or in some cases 100%. So nothing stops you from selling and moving it to safety, and all that. So that's perfectly fine.
Okay, nice one. And taking your point on the, being not just so fixed on the fixed income, um, you have to have a mixture of the two. Even if you feel so strongly that the fixed income is where you won't lose your capital. So now I want to take out from there another question. So how do you want to, what will you have to say to someone who wants to know when is a stock really, should I use the word undervalued and primed for a rally? How do I pick a stock? How do I pick? Now, when I say pick a stock, I want to use that word in a general way around everything that is equity or volatile asset
Yeah.
base. It could be Bitcoin. How do I know that Bitcoin is this value that is selling at is that price that is not overvalued? How do I know that buying into company ABC or buying into share ABC, is right now a fair value at what it is now? And so how do one even decide? There's a whole sea of options in that space. How do I know which ones to pick? What kind of a framework should I apply in understanding which company or which stock or which particular assets to pick at a particular price point?
Okay. I think the first thing you will look at are what are the fundamentals behind the asset. Some assets is difficult to to value fundamentals. So when you take Bitcoin, for instance, I mean, some people will say, oh, it's a store of value, it's this, it's that. Some people will say, well, since it doesn't have everyday use, it can meet certain functions. But one thing you can look at is, okay, how well has that asset done over the last, say, 5, 10 years, and why? So typically I tell people it's like, for anything you're doing, take a 5 year or 10 year chart and look at it. Um, Look at when there were dips and what happened, right? Look at when there were highs and what happened. Um, and then you can now take your decision. Then the second thing is to phase your entry, right? Um, Sometimes you have one-time opportunities that come up. So you had the stock market crash in March last year. That was a one-time opportunity, and so you didn't need to do much calculation to see that, okay, some stocks were trading at 2, 3, 4, 5 years lows. So in that case, one can go in. But really, once you also look at fundamentals, what does the company do? Um, what do competitors say about the company? So one of the best places to find out about a company is to find out from the competition. What do they think about the company? Where do I see the company in, say, 10, 20, or 30 years from now? If the model they adopt remains the same, will this company survive or will it fail? So um, you can take one of the areas which I tend to pay attention to is healthcare, right? Um, Healthcare is a somewhat or part of the healthcare system is a somewhat simple problem, right? If people fall sick, they need drugs to get better, right? What might change in the next 10 to 20 years is the kind of drugs that they will need. Um, what won't change is the fact that they will need drugs. So, um, so in that case, you have to ask yourself that how well has this company done in the last 10, 15, 20 years? What are they doing right? What are they doing wrong? And for people who don't have the time, you might as well just buy an ETF or something that has a basket of different stocks in it. So that way you're hedging. I mean, some stocks will do well, some will do badly, but you're fine with the ETF. Um, for asset classes such as agri-tech, that's clearly high risk. So obviously, if you're doing high risk investments, you have to know that I could make money, I could lose money. I think where people need to just focus on is diversifying, especially if you're not extremely skilled, right? Forget about the ups and downs and all that. I mean, I'm not saying ignore valuations that are frothy. So you can take a Tesla, for instance. I don't think, this is my opinion, I don't think it's gone sky high. So I'm expecting Tesla to do another 500, 100%, 1000% this year. It's unlikely. There's no magic, but Tesla has an amazing fan base. So that stock has been beaten above rationality, you know. Um, but does it mean that one shouldn't invest in Tesla? Maybe, maybe not. So in that case, one could phase one's entry when it's clear that the stock is overvalued. Depending on the stock involved, you can use P/E ratio for the finance firms, price to book ratio. Um, and sometimes you just short all that and say, okay, this is the amount I'm going to be investing every month, whether the market goes up or down, I'm fine. For equities, especially US equities, in the long run, market's always up. You will have several down years, but net market is up. So it's just about blending the right formula and doing research. I think a lot of people don't do research, so sometimes ask questions, read different views. So for instance, you have people that tell you Bitcoin is nonsense, and you have people that will tell you Bitcoin is amazing. So everybody has, both sides have valid arguments, right? So it's good to just weigh both sides and then you come to a decision. In some cases, it's a case of, okay, what's the next best thing? Or what other plays can I make around an asset? So, for instance, with agri-tech, um, if I don't want to do agri-tech, for instance, that's fine. Are there other companies that are operating in agri space um, that I can invest in? And you can do that and you'll be good. You know. So I think those are the ways one can manage issues like that.
Okay, so thank you. Gradually, we are bringing it to a close. So there are two things we normally do ask our guests to share. So one is your journey. How did you go from, or have you always been an investment analyst? Have you always been in this space right from when you were 3 years old? Has it been from kindergarten? Like you had no input, your environment and parents had always put you in this path, or there was a time you developed the interest and you worked on the interest, and the journey you took to get into here. So that's one. Then maybe when you're done with that, I'll ask you the last one.
Okay. I've had a somewhat interesting career journey. I moved from consulting and training. I moved to media. From media, I'm in financial literacy / education. I'd say maybe the common denominator in my journey was I studied economics and statistics, right? And so I've always had a fairly good understanding of how money works, and how the economy works. So I think that's the common denominator. Um, some of my career moves have been purely by chance. So, for instance, I was at Nairametrics for 2 years and a few months. I mean, I'd known Dre, the guy behind it, for a few years. I remember randomly reaching out to him one day that, look, I like what you guys do. I think you guys need to do A, B, C, D, and E. I was like, cool, can you do it? Fine. So bam, I had a job, you know. So I'm not going to come and say, oh, it was God or this. I've definitely God. I've had a bit of luck. I'm not going to deny that. And but it's just also been extremely hard work and just taking one thing and being good at it. So that's that. I've always been a curious person, really. And curiosity helps, I think, in understanding things. And because I have such a varied career background, I don't see things the way most people look at them. So, for instance, when it comes to investing and money and all that, I'm usually not a fan of okay what everybody is doing. I'm more of a fan of creating my own model and sticking to it. As long as I understand it. So I'd say it's a mix of luck, being in the right place at the right time, asking questions, and just maybe studying economics. Economics is quite a handy course. So maybe if I didn't study economics, I wouldn't be here. I don't know. But I've been lucky. I've just had the ability to work in a variety of places. I've had the ability to work in places whereby I can adapt, my skills to, different things, So it's a combination of that, really, not really, nothing out of the ordinary.
Okay, right. So the last one is over your journey, over this your work in this space. What will you say is the singular thing that really was an experience that was very remarkable for you? It could be on the plus side and it could be on the downside. It could be. What will you point?
Okay, let me give both.
Okay.
I think on the plus side, I've been incredibly fortunate um to have had bosses who gave me a central role, so to speak. So I kind of had eyes on everything. So I remember, even though I was in a consulting firm at the time, there was a publishing arm, there was a training arm, but some I had interest in everything. So I kind of figured things out, and I kind of had exposure to different things, which helped me, ultimately made me a better person. Um, and I've also had luck. I've also had a lot of luck. I'm not going to deny that. a great experience for me. I've had several. I think maybe from the media days would be. I remember I had a random opportunity or came randomly. Um, my boss then, Dre, just calls me up on Saturday that, hey, get ready, you're going to Abuja, you're going to interview the vice president. I had never had any major interview before. I was barely a year in the job. Um, I had never been to Aso Rock before. And that's a story for another day. But the long and short was the opportunity just randomly came and I grabbed it and it was great. Um, my worst opportunity, ironically, has turned out to be quite useful for me. Um, I got to handle a radio show briefly on the early days at Nairametrics. They have 3 radio shows. Um, so I was to anchor the show, was to deal with getting the guests there on time. Um, and fortunately or unfortunately, Lagos traffic, I got there late. Um, I got there quite late. The guests got there before me, got angry and left. I mean, you can't predict traffic now, so I kind of, long and short was I bungled it. But funny enough, after that, I've had different opportunities on radios, even side hustles and all that. I've been around radio production and it's been great for me. And so I think in all sense of humility, I've been an extremely lucky person, lucky to be at the right place, lucky to have amazing bosses, um, and that's also a culture I've also tried to implement. My philosophy in life is if people, anybody who stands up to take the opportunity, give it to them, right? So if I see that a person is willing to take opportunity and whether they fail or not, I back them up and they do it because those are the kind of bosses I've had really really. And it's worked for me because if it was about opportunity, I wasn't the most experienced person at the point in time. Or but somehow I've just had great opportunities come my way. I've done well with some, I haven't done well with some, but that's life. Some things you can do right, some things you do wrong, and you just take each day as it comes.
Awesome. So thank you very much. I'm sure the audience have enjoyed a lot of what you've shared. We even had more people towards the end than at the start, which means they're enjoying it and they're adding their friends to the call. I know you are now with Money Africa, and since this your session with us is not like we are paying you, so at least we can let you talk about what you do. Are there some things that our guests will find valuable from Money Africa? Just let's let you do an impact too.
Oh, okay, thank you. Well, I'm going to do things differently, right? Um, much as I do work with Money Africa, there are lots of financial literacy platforms in Nigeria. There are lots of amazing people you can learn from. So yes, do join Money Africa. We have a 6-month plan that gives access to our Telegram community and our web platform. We have a 1 month, 1 year plan that gives access to that. Then we do one-on-one sessions, but above all, really, there's just so much free knowledge there. So if you're deficient in anything, pick it up and learn. Personal development is key. And when it comes to managing money, I tell people there are 2 things you should never outsource. One is your health, and 2 is your money. So if you're an active investor, you're a passive investor, you still have to have understanding of what you're investing in. So just go there and learn as much as you can. Ask questions where you're not clear. Make use of the resources available to you. Nigeria is an incredibly interesting place when it comes to finance, in the sense that um, a lot of the things that you need to study, or a lot of the assets you're investing in, the knowledge is available for free in an easy manner. Some other climbs, it's there, but it's written in such a complex manner that it's not easy for the layperson to do. So I'll say by all means do join Money Africa, follow Money Africa, and follow anybody that's catches your fancy and is making sense in terms of personal finance and investing.
Yes. Thank you very much. I've even posted the link to Money Africa in the chat box. I'm also a good friend of Tosi. So I'm always your fan every day, all the time. So thank you very much. And at this juncture, we'll have to close the session. We thank you for giving us extra minutes. I think we took 18 more minutes, but that aspect of you sharing your journey has been very insightful. And I took the point of always grabbing whatever opportunity comes my way, and not be too worried about am I am I the best for it, or like am I ready or not. Just take it, and over time more opportunities will come, and like you say, net to be positive, right? So thank you
Yeah.
very much. And we'll be glad if another time you have something you would like to share with us. Just you are one of us now. You can always tell us there is something interesting you will benefit the house. And we will be glad to have you here with us again. So thank you. And to everybody who has joined today's session, thank you very much.